Good morning and welcome to your daily solo 401k webinar Q&A session with my solo 401k financial, where we try to help you to stop overpaying taxes and start building real retirement wealth. So today's topic is, can you do a backdoor Roth with the solo 401k? As always, this is also your chance to get answers regarding any aspects about solo 401k plans and self-directed IRAs. So your questions don't have to be specific to today's topic. Go ahead and type them over so we can be sure to get to them. We will pause and answer questions as they come in while we discuss today's topic, which is, can you do a backdoor Roth with the solo 401k plan? I don't see any questions at the moment, so let's get started. So if you are self-employed and looking to maximize your retirement savings, you may be wondering, can you do a backdoor Roth with the solo 401k? The answer is yes, and potentially even more. In fact, if you have a solo 401k, you may be able to use two separate Roth strategies in the same year. You can do the backdoor Roth IRA in the same year, as well as the Mega Backdoor Roth solo 401k in the same year. So let's dissect that further. So understanding the difference between these two strategies, that is the backdoor Roth IRA and the Mega Backdoor Roth solo 401k, and how they work together, can help you supercharge your Roth savings annually. So what is a backdoor Roth IRA? A backdoor Roth IRA is a strategy used by high income earners who exceed the Roth IRA income limits, the modified adjusted gross income limits. How does the backdoor Roth IRA work? First, you make non-deductible contributions to a traditional IRA. You then convert those funds to a Roth IRA, and you pay tax only on any pre-tax portion converted. That's why many times you want to transfer the gains in that non-deductible IRA, which are pre-tax funds, to the pre-tax solo 401k so that you can isolate those traditional IRA contribution, also known as basis, so that you can just convert the basis to the Roth IRA. So the backdoor Roth IRA strategy is commonly referred to as a backdoor because it allows higher income earners to legally access Roth IRA benefits despite income limits. Because again, Roth IRA contributions are impacted by your modified adjusted gross income. And one way around that is by making non-deductible IRA contributions and subsequently converting those funds to the Roth IRA. Now, of course, you have to be aware of the pro rata rule when processing a backdoor Roth IRA conversion. So the backdoor Roth IRA is subject to the pro rata rule, meaning that if you have other pre-tax IRA funds, so other traditional IRAs, even SEP IRAs and simple IRAs, the IRS treats all IRAs as one combined account. So a portion of your conversion becomes taxable. That's why you want to make sure that you are aware that if you do have non-deductible IRAs and want to process the Roth IRA conversion, one way to isolate those non-deductible IRA funds, that is the basis, is to transfer the gains in that non-deductible IRA to the pre-tax solo 401k plan, assuming you qualify for a solo 401k plan. And that way you're able to isolate those non-deductible IRA funds so that you can then convert just those bases. Of course, you would want to transfer any other IRAs, like a SIP IRA, simple IRA, to the solo 401k plan as well, so that you can isolate those particular non-deductible IRA funds. So this pro rata rule can significantly reduce the tax efficiency of the backdoor Roth IRA if you hold other pre-tax IRA balances, unless you isolate those funds like I just mentioned. Now let's talk about what the Mega Backdoor Roth Solo 401k is. So we just covered the backdoor Roth IRA. Now let's talk about the Mega Backdoor Roth, also known as the Mega Backdoor Roth Solo 401k. So the Mega Backdoor Roth Solo 401k is a completely different strategy. It allows you to make voluntary after-tax contributions to your solo 401k plan, assuming that you're using the services of a solo 401k plan provider whose plan document allows for the Mega Backdoor Roth Solo 401k strategy. And a company like my Solo 401k Financial, they provide solo 401k plans that do allow for the Mega Backdoor Roth Solo 401k strategy. And my Solo 401k Financial was actually the first in the industry to start offering the Mega Backdoor Roth Solo 401k, going all the way back to tax year 2013. And they've processed thousands of Mega Backdoor Roth Solo 401k conversions through the years. Now, when you make those voluntary after-tax solo 401k contributions, you then convert those funds. So the Roth, and they get converted to the Roth Solo 401k designated account, or you can choose to convert them to a Roth IRA instead. So this strategy works within the overall 401k contribution limit and allows for significantly large Roth contributions compared to standard backdoor Roth IRA strategies. Let's keep going here. It looks like we may have some questions here. And then we're going to talk about the key differences, or continue talking about the key differences between the backdoor Roth IRA and the Mega Backdoor Roth Solo 401k. Here's a question here. So let's see if I can. You offer mentions you can do self-directed investments, checkbook method. Are the rules around this the same as self-directed IRA? No self-dealing allowed? Can you give a couple examples of how people use this feature? Good question. And we've actually performed webinars on the differences and similarities between a self-directed IRA and a self-directed solo 401k, which is also known as a solo 401k. Let me see if I can pull up some information on that and share it with you. Give me a moment here. But yes, there are differences, but there are many similarities, specifically the prohibited transaction regulations, the self-dealing rules. Those apply the same to a self-directed IRA as they do to a solo 401k, aka self-directed solo 401k plan. So for example, let me share this link here that compares the two. And we actually have a good video on this post here that I'm sharing with you now. Take a look at that. There's also a good video on there comparing the two. But from a self-dealing perspective, yes, the same prohibited transaction rules apply. So for example, you can own real estate inside a solo 401k, just like inside a self-directed IRA. And both do not allow the disqualified persons. such as the solo 401k participant or the IRA participant, to use the property for personal use, nor can they use it for vacation stay, even if they pay fair market value. You are considered a disqualified party, just like your parents, your children, and your spouse are also considered disqualified parties, which means they would not be able to use that solo 401k or self-directed IRA owned property for personal use. Another example is you cannot buy or sell a property owned by your self-directed IRA or your self-directed solo 401k to a disqualified party, including the solo 401k participant or IRA participant, or disqualified parties such as your spouse, children, and parents. Good question. Okay, so take a look at that there. Again, go ahead and type over questions and we'll pause and answer those questions as they come in. If this information is helping you feel more confident about your future, we would really appreciate it if you take a moment to like and subscribe to our YouTube channel. Also, like us across the various social platforms, as this helps us to continue to grow this community and helps others to find this information more readily. And also, by subscribing to our YouTube channel, you will receive notifications regarding when we go live. Okay, so let's continue here with today's topic, which is, can you do a backdoor Roth with the solo 401k? Let's pick up where we left off. So let's talk about some of the key differences between a backdoor Roth IRA versus a Mega Backdoor Roth solo 401k. So if you want to perform a backdoor Roth IRA, there are income limits that come into play. So more specifically, Roth IRAs have income limits, which means that if you make over a certain amount of adjusted gross income, then you cannot make a Roth IRA contribution. However, you can make a non-deductible IRA contribution and convert that to the Roth IRA. Hence, the strategy dubbed the backdoor Roth IRA. Whereas with the Mega Backdoor Roth Solo 401k, there are no income limits to perform the Mega Backdoor Roth Solo 401k strategy. Instead, you have to make sure you have enough earned income from self-employment to justify the overall voluntary after-tax solo 401k contribution amount for the year, and which for tax year 2025 is $70,000. And it's actually not too late to open a solo 401k plan in the current year, so in 2026, so that you can make prior year, that is tax year 2025, voluntary after-tax solo 401k contributions here in 2026 and perform the Mega Backdoor Roth Solo 401k strategy. So that's good information to know, that it's not too late to still open a solo 401k plan in the current year. And of course, for tax year 2025, as I mentioned, the overall contribution limit as part of the Mega Backdoor Roth Solo 401k strategy is $70,000. So you need to make sure you have enough earned income from self-employment activity to support that voluntary after-tax solo 401k contributions, because just like all other solo 401k contributions, such as employer and employee contributions, those are all based on your earned income from self-employment activity. And you can only contribute to a solo 401k if you have earned income from your self-employed business. You cannot make contributions based on your capital gains, investment income, interest income, because that's not considered earned income. Now, some other comparison between the backdoor Roth IRA and the Mega Backdoor Roth Solo 401k is that when you make voluntary after-tax solo 401k contributions to the Roth Solo 401k, or as part of the Mega Backdoor Roth Solo 401k, the pro rata rule doesn't apply to the solo 401k, but it does apply to the backdoor Roth IRA, as I mentioned earlier. And we'll talk more about that in a moment, why it does not apply. Also, when you make a non-deductible IRA contribution, you can only convert that to the Roth IRA. Whereas when you make voluntary after-tax solo 401k contributions, you can choose to convert those contributions to the Roth solo 401k designated account, or you can convert them to the Roth IRA. And we're going to look at an image here in a moment that talks more about the contribution rules as they relate to the Mega Backdoor Roth solo 401k. But again, one major advantage of the Mega Backdoor Roth solo 401k over the Backdoor Roth IRA is that no pro rata rule applies for the Mega Backdoor Roth. So this is one of the most powerful features of the Mega Backdoor Roth solo 401k. That is, it's not subject to that IRA pro rata rule. Why? Well, because 401k plans are governed under different tax code sections than IRAs. The pro rata rule applies to IRAs, not qualified plans like 401ks. So this means that your traditional IRA, SIP IRA, or simple IRA balances do not impact your Mega Backdoor Roth solo 401k conversion. And we get that question quite a bit, where an individual has a IRA, and then they want to perform the Mega Backdoor Roth solo 401k, and they think that that IRA is going to impact their Mega Backdoor Roth solo 401k conversion. The answer is no. So this separation is extremely valuable for high-income self-employed individuals with existing IRA balances. Now, before we start talking about how you can actually perform both in the same year, that is the Backdoor Roth IRA, as well as the Mega Backdoor Roth solo 401k strategy, let's first talk some more about how the Mega Backdoor Roth solo 401k strategy works. And then we'll take a look at, we'll check to see if we have any more questions. Okay, let's see here. Let's take a look at here. So here's a breakdown of how the Mega Backdoor Roth solo 401k strategy works. So this is an example of a one participant plan. Let's say this individual's name is Sally, and Sally is self-employed in an S corporation. Sally listens to this webinar today or in a few weeks or sometime here in the current year, and she finds out that it's not too late to open a solo 401k plan here in 2026 so that she can make tax year 2025 voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth strategy. Let's also further assume that Sally is self-employed in an S corporation and that she's had that S corporation for a few years, included in tax year 2025. Let's further assume that Sally paid herself at least $70,000 of Box 1 W-2 wages in tax year 2025. So Sally opens a solo 401k plan here in 2026 because she wants to maximize her Mega Backdoor Roth solo 401k strategy, even though she's already performed her Backdoor Roth IRA conversion already. That's not going to impact her ability to also process a Mega Backdoor Roth solo 401k conversion. So she opens a solo 401k plan here in, let's say she opens it by April 5th. Even though her self-employed business is taxed as an S corporation, she filed an extension for her business tax return for 2025. So because her business is taxed as an S corporation, when she filed an extension for her business tax return, she's going to have until September 15 of 2026 to both open the solo 401k plan and make tax year 2025 voluntary after-tax solo 401k contributions. And she's also going to convert those voluntary after-tax solo 401k funds to the Roth solo 401k here in 2026. So she contributes $70,000, which is the full $70,000 of W-2 wages that she paid herself for tax year 2025. She deposits that $70,000 to her voluntary after-tax solo 401k bucket, aka bank or brokerage account, because you are required to separately track the various contributions to the solo 401k. So she makes it to the voluntary after-tax solo 401k, the full $70,000, and then immediately, once those funds have settled, she converts those funds to the Roth solo 401k. So now Sally converted $70,000 in voluntary after-tax solo 401k contributions that she made in 2026 for tax year 2025, effectively getting $70,000 into her Roth solo 401k. And Sally can also make a year 2026 voluntary after-tax solo 401k contribution if she wants to, as long as she has enough earned income from her S Corp for 2026. So for 2026, the contribution limit to a solo 401k, the overall limit is $72,000. So Sally pays herself at least $72,000 of W-2 wages in 2026 from her S Corp. So Sally can contribute that $72,000 to the voluntary after-tax solo 401k plan here in 2026 as well, and then convert those to the Roth solo 401k, resulting in processing 2 Mega Backdoor Roth solo 401k conversions in 1 year. So don't confuse the contribution rules versus the conversion rules. They both have different rules and different deadlines. Now, once she converts those voluntary after-tax solo 401k funds to the Roth solo 401k, Sally will complete our online Form 1099-R conversion form request, which can be found on the Forms tab of our website. And that's how we collect the necessary information to issue that Form 1099-R to report that Mega Backdoor Roth solo 401k conversion to the IRS. Now, in the example I just used, Sally processed 2 Mega Backdoor Roth solo 401k conversions in 2026. So just one Form 1099-R will get issued to report the total amount converted in 2026, which is effectively both the tax year 2025 Mega Backdoor Roth solo 401k contribution and the year 2026 Mega Backdoor Roth solo 401k contribution. So let me share our Forms tab. There's a link on our Forms tab where you can request the Form 1099-R to report on Mega Backdoor Roth conversion. So that's how it works in action. Now, not to get too deep in the weeds here, but here's an example of a 2-participant plan. And both spouses, let's say both spouses work in the same S corporation or self-employed business. It can be a partnership, sole proprietorship. They can each perform the Mega Backdoor Roth solo 401k conversion. So they can double up on really supercharging their retirement savings by each processing a separate Mega Backdoor Roth solo 401k conversion under the same plan, because they both work under the same business. Of course, they each have to have enough self-employment income under that self-employed business to justify their contributions. Okay, let's keep going here. So get back to my slides here. So we've been talking about, can you do a backdoor Roth with a solo 401k plan? We talked about the differences. Now, can you do both? That is, can you process a backdoor Roth IRA conversion and a Mega Backdoor Roth solo 401k conversion in the same year? Yes. And this is where things really get exciting. The Backdoor Roth IRA and the Mega Backdoor Roth solo 401k are completely independent strategies. So that means doing a backdoor Roth IRA does not reduce or affect your ability to do a Mega Backdoor Roth, aka Mega Backdoor Roth solo 401k. So doing a Mega Backdoor Roth solo 401k does not impact your backdoor Roth IRA. And why? Because they operate under different rules and limits. Therefore, you can max out your IRA based backdoor Roth. You can also max out your solo 401k contributions. That is your voluntary after-tax solo 401k contributions, and then perform the Mega Backdoor Roth. So this combination can dramatically increase annual Roth savings because you're effectively maximizing both your Mega Backdoor Roth solo 401k and the Backdoor Roth IRA in the same year. So I often get the question, where can the Mega Backdoor Roth solo 401k conversion go? Well, let's pull up a slide and talk about that. In other words, what that question means is, can I convert my voluntary after-tax solo 401k contributions to the Roth IRA instead of converting them to the designated Roth solo 401k subaccount? The answer is yes. So with a properly structured solo 401k, voluntary after-tax contributions can be converted either to the Roth solo 401k designated account, resulting in keeping the funds inside the plan. So there's no IRA involvement necessary. That's option one. Option two is you can convert those voluntary after-tax solo 401k contributions to the Roth IRA. So these funds will get converted to the Roth IRA instead of the Roth solo 401k. Now, just like a Roth IRA, Roth solo 401k plans are now subject to required minimum distributions, which is a distribution that applies once the account holder reaches age 73. It used to be that Roth solo 401k funds were subject to RMDs, but not anymore. So people used to convert the voluntary after-tax solo 401k contribution to the Roth IRA instead, but not anymore. We find that more individuals are converting those voluntary after-tax solo 401k contributions to the Roth solo 401k because it provides more flexibility where you can actually take a solo 401k participant loan where you can borrow 50% of your solo 401k balance, not to exceed $50,000, whereas IRAs, including Roth IRAs, do not allow for participant loans. Also, for those that like to invest in alternative investments, specifically rental properties, it's often more advantageous to invest in real estate through a self-directed Roth solo 401k instead of a Roth IRA. And one main reason for that is because if you utilize debt financing where your solo 401k obtains a non-recourse loan, so it obtains funds that it borrows from a bank or a hard money lender. Those funds can then be used to invest in rental properties. When you utilize that type of debt financing with the Roth solo 401k or any solo 401k source, whether pre-tax solo 401k funds or Roth solo 401k funds, it's not going to trigger what's referred to as unrelated debt finance income tax. Whereas a Roth IRA that utilizes unrelated debt finance income, that utilizes non-recourse financing, so a non-recourse loan, that unrelated debt finance income tax does get triggered and applies, which can be as high as 38%, which means that your Roth IRA that owns real estate is not going to profit as much as it would if you made that investment through the Roth solo 401k. So those are some items to consider when asking yourself, should I convert my voluntary after-tax solo 401k contributions to the Roth IRA or to the Roth solo 401k? So this slide here kind of gives you a nice breakdown there. So let's take a look at some questions here, and then we'll come back and go over a few more slides here. We're coming to the end of our session here, but hey, we'll be live again here in a couple hours. Here at my solo 401k financial, we typically go live every day, at least once a day, oftentimes twice a day, and today is one of those days we're going live again. So if we don't get a chance to answer all your questions, come back here in a couple hours and we'll be covering another topic and you can ask your questions at that time. Let's see if we have some questions here. Here's a question. Had a follow-up question I asked earlier this week. You had said there wouldn't be an issue with opening a retroactive solo 401k for 2025. I just wanted to check. Would that hold true for E-Trade or Schwab as well? I just don't want to pay my fee to my solo and then be turned down by the brokerage. Well, keep in mind that you're not opening a solo 401k with Schwab or E-Trade. Those companies do offer their own solo 401k, but it's restricted. It doesn't allow for the Mega Backdoor Roth solo 401k strategy, for example. It doesn't allow for solo 401k participant loans. So if you open a solo 401k with my solo 401k financial, you would fall under our plan. You wouldn't fall under Schwab's or E-Trade's solo 401k. So good question. So yes, whether you open a solo 401k with my solo 401k financial, or if you open a solo 401k with Schwab or E-Trade, the same IRS regulation rules apply, which is that you have until your business tax return due date plus timely filed extension to open a solo 401k for the prior year so that you can make prior year solo 401k contributions in the current year. And as I talked about it earlier this week, it's going to be driven by how your self-employed business is taxed with respect to what types of contributions you're going to be able to make. So for example, let me go here. If your self-employed business is taxed as an S corporation or partnership, you can open a solo 401k plan here in 2025 and make tax year 2020. Excuse me, you can open a solo 401k plan here in 2026 and make tax year 2025 contributions, but you can only make certain types of contributions. Those would be employer contributions, as well as voluntary after-tax solo 401k contributions, but not employee contributions. So that's very important. And you would have to do so by March 15 of 2026 if your self-employed business is taxed as an S corp or partnership. But if you file for a tax return extension for your S corp or your partnership, then you have an extra 6 months, and you would have until September 15 of 2026 to open and fund the solo 401k for tax year 2025 contributions, but only employer contributions, as well as voluntary after-tax solo 401k contributions. On the other hand, it's more advantageous for a sole proprietorship. So if your business is taxed as a sole proprietorship and you want to open a solo 401k plan in the current year, so in 2026, so that you can make prior year, that is tax year 2025 solo 401k contributions, you can open that solo 401k plan by April 15 of 2026, and you're going to be able to make all contribution types for tax year 2025, but they have to be made by April 15 of 2026. Specifically, you'll be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. If you file for a sole proprietorship extension, so effectively a Form 1040 personal tax return extension, you're going to have until October 15 of 2026 to open the solo 401k plan and make tax year 2025 solo 401k contributions. However, you will only be able to make employer contributions and voluntary after-tax solo 401k contributions if you wait until October 15 of 2026. So take a look at the slide here. So good question. Okay, let's see if we have any more questions here. Okay, so here's what we have going here. If I make $50,000 through my self-employed LLC, how much can I contribute? Well, it depends on how your LLC is taxed. That's one of the important items to understand about an LLC. With an LLC, you can choose how to be taxed. You can choose, or I mean, more specifically, you can choose tax election. So that LLC can be taxed as an S corporation, it can be taxed as a partnership, or it can be taxed as a sole proprietorship. Assuming that LLC is taxed as an S corporation, you would need to pay yourself at least $50,000 of W-2 wages if you want to be able to contribute that entire $50,000 to the voluntary after-tax solo 401k and then convert it to the Roth solo 401k or the Roth IRA. Okay, let's see here. See if we have some more questions here. Let's see. It says another question here. I would be making employer contributions as an S corp, so it sounds like you guys help with application for brokerage like E-Trade Schwab. We do, and as a matter of fact, I would stay away from E-Trade altogether. We can help you open up the brokerage accounts for the solo 401k over at Schwab or Fidelity, but I would avoid E-Trade because E-Trade takes about 6 to 7 months before they open the brokerage accounts. Ever since they merged with Merrill Lynch, I think, or one of those institutions, they've been terrible for opening up the brokerage accounts. So I would stay away from E-Trade. I would either use Fidelity or Schwab, but yes, we would assist you in opening in the brokerage accounts at Fidelity or Schwab for the solo 401k that we offer. Okay. Let's see. I don't see any other questions at the moment, so let's continue here. So we've been talking about today's topic, and we've been answering your questions as well, but we've been talking about how can you do a backdoor Roth with the solo 401k, and we're coming to the end of our session for today. But again, we'll be live here in a couple days, and not a couple days, in a couple hours. So if this information is helping you feel more secure about your future, please like and subscribe. It really helps us to get the word out to other solopreneurs out there and to grow this community, even to other self-directed IRA investors. We're well versed in all the solo 401k regulations as well as the self-directed IRA rules, and we go live on a daily basis. Okay, let's see here. So back to our topic here. Let me pull up my slides here. So let's do a summary here of can you do a backdoor Roth IRA with the solo 401k? So we found out that the answer is yes. You may be able to do even more. That is, you can perform a backdoor Roth IRA, and you can also perform a backdoor Roth solo 401k, and you can do both in the same year. And you're going to avoid the pro rata rule by using the Mega Backdoor Roth solo 401k. And the reason why you avoid the pro rata rule with the Mega Backdoor Roth solo 401k is because the voluntary after-tax solo 401k contributions will be deposited into its own separate holding account. It's going to be an account titled voluntary after-tax, and that's how you avoid the pro rata rule. So you actually put the funds, you actually make that voluntary after-tax solo 401k contribution to the voluntary after-tax solo 401k, and then you convert those voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA. And that's how the Mega Backdoor Roth solo 401k avoids that pro rata rule that does apply to the backdoor Roth IRA. So, and also, you can utilize the solo 401k to help you isolate your what's called non-deductible IRA contributions by transferring the gains in that non-deductible IRA as well as other IRAs to the solo 401k, the pre-tax solo 401k, so that you then isolate those non-deductible IRA funds, so you only convert the basis to the Roth IRA. So when structured correctly, this strategy can significantly increase your long-term tax-free retirement wealth. What is more, if both spouses are self-employed in the same self-employed business, they can both participate in the same solo 401k, and they can both perform the Mega Backdoor Roth solo 401k strategy, resulting in really maximizing the Roth solo 401k savings for both spouses. Okay. So I don't see any other questions for now. So that's it for today's or this morning's solo 401k session. We'll be back here in a couple hours. Thank you so much for investing your time with us. Your time is valuable, but we feel that your retirement future is worth it. If you haven't yet, again, please like and subscribe to our YouTube channel. Like us across the various social platforms as well, so that we can keep growing this great community. Okay, signing off for now. Have a good rest of the day.